Hi there, this is Tom Lee. I'm the Chief Investment Officer of Fundstrat Capital and the Portfolio Manager of the Fundstrat US Large Cap Granny Shots ETF. This is our update for the ETF as of the week of January 12th. Some information before I start. Current NAV is $19.73 and total assets are $678 million. Before I begin this video, we have received some comments, and I wanted to share one, which is from Pasha, which is the general public on X is very lucky because as a paid subscriber to FS Insight, they don't get to see the presentation of Granny Shots on the FS Insight platform. Well, Pasha, you are correct. All you have to do is go to grannyshots.com and then sign up for the latest updates. Fill in your information and you will receive updates from Granny Shots, whether it's videos or our monthly webinars. Over the past week, the Granny Shots ETF is down 2.5%, while the S&P was down 1.91%, with a relative negative underperformance of 59 basis points. Now, this 1.9% decline in the S&P is quite painful. And it highlights that 2025 has really been turbulent to start. And someone else asked, named Joseph, how does Granny Shots manage risk? When would you go to cash in a down market? And that's not what we do. But I do want to talk about down markets. When markets become nervous, correlation starts to rise. And when there's a high level of correlation, and I'm talking about correlation between stocks, it's actually harder to construct a diversified portfolio, meaning when equities fall and correlations rise, there's not really a strategy around reducing your correlations until, of course, markets begin to recover. And I just want to illustrate that. This is what we call 1 month realized internal correlation for the S&P. And on December 6th, you could see correlations were quite low and then soared to 27%. Well, that's because not only are markets falling, but correlations are rising, meaning stock picking is going to be less important when correlations are higher. And also in that period of time, the VIX actually has risen. And when the VIX is up, it's also a risk-off period. And you really want to see the VIX around 15 before markets can really find sustained footing. Part of all this you're asking is, what is really causing markets? And I think one of the biggest is that interest rates have risen. The 10-year yield is at 4.76%. And that's not only a one-year high, actually kind of a multi-year high, but it gets investors very concerned about what it means for financial conditions. Now, we don't know where interest rates are going to go, but I do want to highlight something. The S&P 500, I think, is really just doing essentially a mirror image of what happened from November. So from November 4th to December 6th, which was 23 trading days, the S&P rose 7%. And during that period of time, the S&P was positive 18 of 23 days. So of course, a great stretch of 23 trading days where the market was very, very strong. Since December 6th, which has been 22 trading days, the S&P is down 5% and has actually only been positive 8 of 22 days. So you can see what I'm saying, which is that this period over the last 22 days is actually just a mirror image. Now, that just highlights that there's turbulence, but I think you need to focus on the bigger picture. And we've talked about that, being long-term greedy, because I think how we trade over the last few weeks doesn't really have any bearing how we're going to trade for the rest of the year or going forward. Since inception, the Granny Shots ETF is down 1.35%. The S&P is actually down 1.45%. So the market's down even more. And that means Granny Shots has had positive relative performance of 9 basis points since inception. Now let's look at the individual stocks. This is sorted from best to worst over the past week. And these are the theme memberships listed here on the right. And you can see the S&P and Granny Shots are highlighted in terms of the relative performance. And this shows you that within the Granny Shots ETF, roughly half the stocks are doing better than the S&P and roughly half were doing worse. The top 5 performers over the past week are Intuitive Surgical, Costco, Meta, Leidos Holdings, and Garmin, but with modest positive gains. And the biggest declines are, or the 5 bottom contributors are AMD, Oracle, CBRE, NVIDIA, and Ingersoll Rand. Now, there's a lot to watch this week, notably because there is earnings season starting for fourth quarter 2024 calendar year. And there's also a major economic report being released, which is on Wednesday, December core CPI. Now, as a bit of context, if you're wondering what a granny shot is, it refers to a type of basketball free throw, which is unconventional. Most people do overhand like Shaquille, and the success rate is only 52%. But a granny shot is done underhanded. It's the correct way from a physics perspective, and Rick Barry, NBA Hall of Famer, popularized this and had a 90% hit rate. That's what we're trying to achieve when we look at granny shots from an investment perspective. And we do that by looking at long-term themes like millennials, global labor suppliers, energy, cybersecurity, and easing financial conditions, as well as tactical themes that we rebalance every quarter, like style tilt, seasonality, and the PMI recoveries. Now, in order to be a granny shot, not only does it have to appear in a theme, because we're picking the strongest stocks in each theme, but it needs to appear in multiple themes. And the strongest stocks are appearing in more than one theme. There's more information in the fact sheet, and of course, at our website, grannyshots.com. And this is our investment management team. Thanks for listening, and I'll speak to you soon.